Here's an invitation for our podcast listeners. If you have a stock that you've been researching, or maybe you've gotten strong recommendations from a trusted source, get a second opinion from Steve and win a subscription to our weekly KPP Premium newsletter. It's our Pitch Your Stock contest. You can call with a stock that you see as a winner, and if we agree, you'll get that year's subscription to our KPP Premium newsletter. Just call us with your stock pick, give us the symbol, and give us your pitch, and leave your number or email. We'll talk about it on the next program and get right back to you. And thanks again for listening to Invest Talk. Welcome to Invest Talk, 1 hour about funding your retirement. Do you take stock in surveys? Well, here's one that says that 83% of all Americans say they think the recession has changed their retirement plans. Many of us are wondering how to respond. Save more? Invest less? Get more aggressive with our investing? One thing for sure, if you have a 401k, you shouldn't abandon it. That's just one of the topics on the table this afternoon, putting your 401k back to work. What's your question on this Friday, June 26th? Stay with us and join in the discussion. This is Invest Talk, dedicated to the idea that you can do better than the average investor. And now, filling in for host Steve Peasley, it's Money Manager Justin Klein along with Jason Topper.
Good afternoon, everybody. Happy Friday, and welcome to Invest Talk. And our goal here every day is to help you make the most of the money you have saved and the money you are investing, and hopefully we can do that. You know, weekend's coming up. I'm sure everyone's excited, but it's been a very interesting week in the markets. But we're going to talk about today putting your 401k back to work. A lot of people might be abandoning their 401k because they're scared of the market, and it's natural human emotion to, when you see the value of your assets going down, to jump ship, go to cash, and not be invested in the market. But it's to be a successful investor, it's almost, you have to be counterintuitive. You can't let those emotions guide your decisions. So we're going to talk about how to get your 401k back on track, what you need to do to do that. But today in the market, it was down slightly, not a major down day. During the end of the day, it tried to fight towards the flat line on the week, but the market still ended a little down on the week.
Yeah, there wasn't too much volume today on Friday. The Dow was up 34. The Dow was down 34, and the Nasdaq was up 8. But the news today was consumer savings rate, and the savings rate soared to, I think it was about 6.8%. And so the market sold off because of that, because we want consumers to spend their money. We want to boost the economy, and the only way to really do that is from consumers spending their money. So them saving a little bit more isn't such a good thing for the economy. I think for people's debt levels and the stability of their own personal finance, I think it's great. But to stimulate the economy, that's not what Wall Street was looking for today.
Exactly, and that was really that made the market downbeat. But I think this is something that the equity markets, the bond markets, all the financial markets need to realize, is that this is not a short-term phenomenon. This isn't something that it's going to take 6 months, a year to get past, and we're going to get back to raging, booming, great spending and economy and all that. It's not going to work like that. We were really drunk on a lot of debt over many years, and it's going to take many years to deleverage the entire economy, not just the banks. The average person, they have too much credit card debt, they have too much housing debt, they have too much car debt, they have too many student loans out there, and that's going to take time to work itself out. People need to make money, they need to have excess money to pay down debt, and you can't do that overnight. It's going to take many years to do that, and I think that, to me, is what's going to keep the economy somewhat subdued. Yes, we're gonna gradually get out of it, but it's gonna be fits and starts. It's gonna be choppy, but it's not gonna be great, and that is why, because there's not gonna be a ton of spending.
Right, and I think consumers are becoming a little bit more intelligent with their money. They're not going out there and, like you said, going out and buying the flashiest car or the huge houses. They really can't anymore, and they realize that, and their debt levels are so high, they have to somehow cut back. So I think it's a good thing overall for the savings, and I do like how the Dow or just the general market is reacting right now. We had a 100 and some odd point up day yesterday, and the market's only down 34 points today. So I think that the overall market is kind of consolidating in this area, which is it's nice to see when the market's up about 30% or so from its lows.
Yeah, you got to remember, the market isn't going to go up in a straight line.
Right.
So, we've had somewhat of a pullback over the past, what would you say, 2-3 weeks? 3
Yeah,
weeks
about
or so?
that, 2 weeks or so.
3 weeks, and it should be expected. You can't expect the market to go straight up. The only thing is you want the market to consolidate. You don't want a huge tank job. You want something that is going to move higher steadily instead of straight up, because straight up is just kind of scary. That makes the market overextended, and it creates the large potential for huge falls in the market. But if we can stay in a nice consolidated range for a little while, that should make everyone happy. Get people a chance to get in the market and reduce that massive amount of cash that's on the sidelines.
Yeah, and Justin and I were talking about last time we were on the air about how you have to kind of reallocate the different areas in your portfolio, and the commodity area has gone up 70 to 100%, some of those stocks. And so those might be overweight in your portfolio right now. So this might be a time to kind of cut back on those positions and maybe invest in some larger cap or dividend plays. I think that would be a good opportunity to go ahead and do that.
Yeah, and there are multiple areas I think that the average investor can take advantage of. Like you said, there's a lot of income plays out there, and with the market pulling back, look for the foreign names. I think foreign investing is probably the place that you really want to focus on right now, because yes, the dollar's probably going to be a little stronger over the near term, but long term we're still running massive deficits. I put all my faith in the fact that the government will overspend and keep putting us into a deeper and deeper hole. It's hard for me to imagine our politicians stop spending. They've been spending nonstop like drunken sailors for years and years and years. And yes, they may not have a $2 trillion deficit every year like we're going to have this year, but it's going to be large.
Yeah.
All right, now it's time for you to get your phone going. We have open lines for you, question and answers, and comments. We want to hear them from you. The number is 888-99-CHART. That's 888-992-4278.
You're listening to Invest Talk live 4 to 5 Pacific Time on this Friday afternoon, putting your 401k back to work. Our talking point today, 888-99-CHART is the number to call. Anytime, we're here for you on Invest Talk.
888-99-CHART, 888-992-4278. We want to hear from you live right now, 4 to 5 Pacific Time. And let's go to Fred in Stanford. How you doing, Fred?
Hey, Fred.
Great. It's always nice to have the Jaybirds.
The Jaybirds.
The Jaybirds.
That's your new nickname, huh?
That's your name, the two Jaybirds.
Yeah.
And I may say to Jason, who said earlier the market was down 34, that's only the Dow. The market is the S&P 500, guys. It isn't